Hi everyone, hope you're all doing well, and today I'm going to talk about the 12 stocks that I bought last week. As you know, the stock market was very ugly last week, and it gave us some Black Friday deals, and because of us having some Black Friday deals in the stock market, I took advantage of that in the UK stocks, the US stocks. I was buying quite heavy. So I'm going to go through the 12 stocks that I bought last week. Now, if you do want to know when I'm actually buying or selling these companies in real time, make sure you join the Patreon, link is in the description. As well as that, you get access to a Discord with 600 members on and exclusive content on there. We do 2 exclusive videos a week. One of them being this one, which is talk about having a game plan when you're buying stocks. So you get to check all that out. Link is in the description for that. And an actual Black Friday deal, not the ones about the stock market going down. An actual Black Friday deal here from Stake. So if you join through Stake with a link in the description, it should be the top link in the description. You join through there, set up account. When you set up account, you have to put your email address in, and at the bottom it says referral code. If you put in one of these referral code, you will get a $30 of that stock. So for example, if you wanted to have, say, $30 of Apple, all you need to do is when you sign up on the referral code, just put the AAPL in, and you'll get $30 of Apple. Now, I think this does run out in the next 2 days, so if you do want to get that, you need to be nice and quick. But anyway, we'll get stuck onto the video and the 12 stocks that I bought. So number one, of course I bought this one, Gang. I bought some more Gang, and it's one of those that you just keep looking at. It's one of those that you go, oh, it's at $13. It won't go any lower than $13. $12. You go, that's it now. No lower than $12. $11. You got $10. Come on, $10. $10. $10. $9. No, come on. And yeah, we actually hit on the 52-week low of $9 this week. It has gone back into that $10 mark, but it did drop into that $9. And it's one of those that you keep looking at this one and go, it can't go any lower. And it does do it. I mean, you just think it can't go any lower, and it is going lower. And every time that it goes low, I'm just like, no, stop it. We're not going any lower. And it happens, and every time we start dropping from that 12 to 11 to 10, I'm just looking at the upside, and I'm like, the upside is just absolutely stupid, because in my opinion right now, Gang is already, like, if we said like a fair value on this, in my opinion, Gang should be in that $20 to $30 in that price range right now. It shouldn't be in the $10 range. No way should it be in this price range. So the more it just keeps going lower and lower, I was like, all right, give me more, I'll buy more, because the upside I see is just getting bigger and bigger. And the crazy thing is, you look at this stock, it came onto the stock market, $14, 8th of May, and the thing is that this company has made so much progress in the last kind of year and a half, and you just look at the share price right now, and you're like, the stock is so much lower than when it came onto the stock market, and in that year and a half, we've made so much progress, and it doesn't make sense. So with the stock market doing absolutely stupid stuff, I'm just buying this one quite a bit. And like I said, when we look at when it came onto the actual stock market, if we take it from this financial point here, you can see like the revenue it was making, slightly in profit, but then it went, okay, let's just ramp up this revenue, and then the profit will come a bit further down the line, which it will do, because if you ever look at the margins they make on the actual business, it's absolutely fantastic. But you look at where we're at now, 28 million, boom, where we're going to be at the end of the year, 130 million. So the revenue has gone up an absolute huge amount. Sure, we're losing a bit more money, but the profitability will come back in a little bit. But when you're talking about in that year and a half period, your revenue's gone up, nearly 5-6x in that period of time, and even outperformed. Like this year, we were only supposed to do about 105 million this year, but we're actually even outperforming that. So the company's absolutely smashing it on the financials, and as well in that period of time is that analysts thought this company after this big growth year, analysts actually thought we were actually going to grow about 20%, and Gang actually came out, our aim is actually to do 30% revenue growth going forward now, and analysts are slowly updating their expectations, and that's had no reflection in the share price. And I'm not going to talk about it too much because I had a full video about it, but I'm just looking at this one now going, it's had a fantastic year and a half since it came on the stock market. The future plans they have are even better than what analysts thought. So we're smashing what analysts said they were going to do, and going forward we're going to smash what analysts said we're going to do. And we're beating any expectations. The valuation is just dropping. I mean, if we're looking at if we just do a price to sales off the top of our head right now, about 130-ish. I mean, we're about a 4.2 billion market cap. So yeah, I mean, we're a free price to sales ratio around there going forward. So I mean, to have a company that's grown 100%, not losing that much money, we'll probably do profit in the next kind of 12 months. Amazing balance sheet. It's an absolute steal at these top prices, in my opinion. Like I said, for me, this is already a $20 stock. This is right now should be double the price of what it is, and then you factor in, okay, what growth we have in the next 5 years. For me, every stock I buy is I always think about 100% return, but I look at this one and go, this is easy 3x potential, in the next 5 years. So yeah. Next up, Celsius. I did buy a little bit more Celsius. I'm being a bit patient with this one, as you guys know, I talked about it previously. I'm buying this one at quite a heavy valuation. The reason why I'm buying it at a heavy valuation is because every time that I've looked at this previously, and I think this is still quite a overvalued stock in my opinion. Like, I could easily see this stock coming down to $40-50. But the reason why I'm actually thought, I'm just going to buy it is because I've learned from mistakes before about trying to time it and get it at the perfect valuation, and it just doesn't happen. So every time I've seen previously this stock kind of like dip a little bit, 20, 30, 40%, the stock just, the investors just tend to buy it straight up. So now we have this dip, I think, right, I'm just going to buy a position. If it does go to the $30, $40, $50, then I can just build out my position completely. So I thought, I'm just going to nibble away, get a bit of position built. If it gives me the price I want it to, I can make it quite a big position. So that's what I'm doing with this one right now. And just from a valuation point of view, you look here, like you can tell on a price sales history point of view that it is a lot higher than what it always historically has been. So I guess you're probably thinking, like, what's the point of buying it then? Well, the big difference is now is that it does grow a lot quicker than what it previously does, and the amount of profit it's starting to do is more and more. Now, you could argue that potentially going forward they might slip out profitability a little bit because they're ramping up the distribution part of it so much, but that will benefit the profit even further down the line. So yeah, they're absolutely on fire. So it's one of those that I'm just kind of not having a Shopify where I like try and go, oh, I'm going to wait for it to come to the perfect valuation because it might not happen. If it stays here, I still have an okay position. Ideally, if it can get a bit lower, then I can build up to a solid position size. So I did buy a bit more of this one. Next one, DraftKings. Of course, I'm going to be buying this one. This one down at $36. I was actually talking on the Discord the other day and saying that now that DraftKings is at this sort of prices, because they're going to buy GNOG. GNOG is actually now back at the price that it was when the deal was announced. So obviously no one ever thought DraftKings was actually going to get down to these sort of values. I mean, it always has the potential to maybe drop and go to like something like the $50 range or maybe in the $45 range, but $36, we're being a little bit silly now. You look at the share price and the share price drop it has had off recently, and you look at the amount of progress this company has made over the last kind of 12 months going forward, the progress it's made. It's growing at 100% revenue rate at the moment, and it has the path to profitability. We know parts of the company are profitable, and the more this matures as a business model, it's going to be a company with really good revenue growth, really good profit growth, and in my opinion going to be a future 100+ billion market cap company in the next few years. So obviously it's my biggest position, and I bought more of it. The more I can get that average lower and lower, I will do. Next up, HIMS. So HIMS, once again, this is a stock that you look at. It's like a gang, like a DraftKings. You look at this stock and you go, it can't go any lower. And there you go, $6, 52 close, $6.58. Once again, this stock smashed the financials this year. The valuation is absolutely bonkers, and all it's had in the last 3 months is positive news of smashing earnings, updating the guidance, brand deals with Walgreens, extending onto Amazon, and you think of all the progress it's made in the last 12 months, and you go, it's at 52 close. Just come on, let's stop it. And this is a stock that one of those that, as someone that kind of makes a lot of these videos, you always get the ones like, look at HIMS, you're buying HIMS and it's going down. You're looking at, you buy DraftKings, you get it all the time, and you got to have a bit of thick skin and everything like that. It doesn't bother me because I know that all of these will play out, well in the long term. And there's a few people like, laughing like, oh, HIMS is now $6. What about that? Don't worry about me. I just keep buying these. If you give me them cheaper, I'll buy them cheaper, and I'm going to make more money. Because I'll tell you something, in the next kind of 2 to 5 years, when this stock starts going to $12, when it goes to $18, when it goes to $24, I'm going to have some good screenshots to go, I told you so. It'll be very much like a Greg situation. There were people going on about Greg's going, oh, Greg's just keeps going lower and lower. What are you buying that for? It's a terrible pick, and everything like that. Don't worry, it will happen again. And I look at a lot of these companies, and you're looking at the financials, and the financials are absolutely on fire. The share price isn't, but don't worry, that share price will rotate at some point. This one in particular is one that stands out as one that, at some point when the stock market turns and these stocks come back into favour, these are the ones that are going to shoot up a crazy amount. So watch these stocks, and this is one of them, very much like a gang. Next up, ASOS. Trying to build this position. I'm about halfway built into my ASOS position now. So I'm doing quite well building this one. This is just going to be an average position in the UK portfolio. It seems like it's kind of consolidating around here. So the more consolidates around here, I can get to. This is the price range where I ideally want to kind of build this ASOS position. So yeah, I've been buying a little bit more ASOS. Of course, if I'm buying ASOS, I bought some more Boohoo. £1.74. I mean, this is crazy. I mean, this is my biggest. So DraftKings is my biggest US stock. Boohoo is my biggest UK position. And I look at Boohoo, and yeah, at £1.74, this is an absolute steal. Absolute steal. You know, it's been a bit volatile over the last few years, but everything the company's put in place, everything John Little's put in place to kind of counteract what's caused the drops previously, should benefit it going forward. The company is fantastic. You know, it puts in decent profit growth. It has its own brands. It'll command really good margins. It has the Debenhams purchase to come into it yet. Clean balance sheet. The growth is absolutely amazing. You know, 30% revenue growth. 30% revenue growth with a profitable company. You know, these are the best stocks to own. These are really good stocks. And yeah, I mean, obviously it's down at a P ratio of 37. Obviously it's got the short-term logistic problems going on. Short term. This isn't where Boohoo's going to be in the long term. In the long term, this is easily a £3 stock, and above that, it's going to go to, in my opinion, £6 to £9 range in the next few years. So I am buying this one a huge amount, and that's why it's my bigger position. You know, you only have to look at in the next kind of few years. Boohoo is probably going to get around to about 100 million profit. You work out 100 million profit on this current market cap. You talk about a stock that's going to be around about a 22p ratio. A stock. The average of a stock market is around 20p ratio. I'll tell you something, Boohoo is not your average stock. It's not a stock that trades around a 22p ratio. It deserves to trade around a 40 to 60p ratio, so you watch that in the next few years. It's going to happen. It's going to be a good stock. Next up, KBox. So this is one that kind of got away from me. It's been a lovely uptrending stock here. You don't get many of these that have these like lovely uptrends. But what has happened, if I can just go on a little bit recent, you'll see this, boom, a little bit of a drop. So it had a little bit of a drop. It was a spook of everything that went down this week because of the new variant. Obviously that would mean that it shuts all its locations again, even though it still does quite good online, to be fair. And also there was something about the insider selling, so that might have caused a little bit of, if the insider's selling, should I be worried? Kind of thing. But people don't tend to worry as much when you've been doing this. So anyway, KBox was a stock that I was up a lot of, and I didn't buy a solid position. So because it had a drop, I went, okay, I can buy at last a bit more into this one. I did average up a fair bit, but this is a really quality stock for me. I think the plan of doubling the stores they have, I think the valuation isn't too bad. It's also a dividend stock. You know, the growth's really good, but you get a dividend on it as well. Yeah, so this is one that is way off being fully built. So now I had the dip, I took that opportunity to buy that one, and I will try and buy a bit more of KBox when I can. Next up was Card Factory. So this is one that definitely got spooked because of the CV situation, and could probably get spooked even more because the big threat to this is if the stores close, because this has an awful balance sheet, you start talking about the bankrupt word with the stock. So for me, in my opinion, I don't think it will get to that with Card Factory. The only little thing that I'm frustrated with is it might take footfall traffic down in city centres, which might affect Card Factory. I don't know. This weekend where I've been, it seemed pretty busy still, even with everything going on. So we'll see what happens, but I think they'll still do okay. I mean, obviously the thing at the moment is that you look at this here and it's like, it did shoot up and then boom, it's just kind of been downtrending for a while, and back here it's actually at the point now where I nearly bought in. So because it's nearly at the point where I bought in, I was like, okay, we're going to buy some more now, because in my opinion right now, what Card Factory put in financials wise deserve to probably be about a £1 stock. So yeah, and I think that probably in the long term it will probably come to a £1.50 stock. So yep, buying a bit more of this one. National Express, UK stock once again, travel based, so this was hurt a huge amount. But I think once again this has, obviously it will benefit when the economy opens up, but it also has a lot of in Europe and the US, a lot of vital transport where it doesn't really matter if you're going on holiday or travelling for just for you to have a good day out. There's a lot of public transport that they manage, so whatever happens, this will still probably do okay compared to like an airline, for example. And it's a fantastic company. So yeah, I bought a bit more of this one, which I haven't touched for a while. Probably the most ugly investment I have made this year through 2021, which was best of the best. So I did buy a bit more. I don't want to buy too much more now. I'm pretty much fully built on this one, but it has had a pretty ugly year. I'm about now down about 40% on this one, but I think now it is kind of flatlining a little bit. The kind of where best of the best, the slowdown of everyone being at home, so they're not playing as much, that's kind of flatlined out a little bit. The cost of advertising is flatlined a little bit. So now it looks like best of best is starting to get into a bit of a good or okay situation. It does play a bit of a dividend, and it is a cheap valuation, but when the profit kind of comes out in the next few months, you'll probably see that P ratio jump up a little bit. So yeah, I'm kind of just buying a little bit of this one. I still think it could be a solid company in the long term, and I think it will still pay a bit of a dividend. So yeah, I'm buying a bit of a best of the best, but it has not been the best pick of the year, we'll say that so far. But I'm still thinking I'll still do okay from it. And Baba, obviously there was the earnings that came out. The earnings came out, basically had guidance that didn't put Alibaba growing at what they normally do. That's going to happen when you have hard comparisons to beat. And then there's also some delisting fears. And yeah, I mean, Alibaba at $133, which is absolutely crazy. I mean, the last time Alibaba was at that sort of prices, I mean, it's even, look at the CV times. You have to go all the way back to 2017 when it was this price. So that kind of puts into context how much that Alibaba's dropped. So yeah, Alibaba once again, won't mind buying a bit more of this one. If you trust the financials and you don't think there's that much risk to Chinese stocks and the regulation side of it, then it's probably a screaming buy right now. And the last one, which I've not bought for a while, I did buy a little bit more Corsair. This company's sold off a huge amount. It's really weird because it probably shouldn't have really. It's been downtrending for a while, and even to this point, it was actually still doing like a really good financials, which is crazy that it sold off. I think in the long term, Corsair will still do very well because gaming, streaming is still going to be very popular. I think the valuation is really cheap. The growth they'll do is fantastic, and it's only logistic costs that are at the moment hurting them. You know, you look at Q2 only 3 months ago, the earnings were absolutely fantastic. Revenue still grew 24% over very hard comparisons to beat. The gross profit was a huge amount, growing 24%. So yeah, I mean overall, you know, this company only 3 months ago was doing absolutely fantastic. I mean, it's been stung by the logistics side of it at the moment, but in long term, I think the revenue will come back, the profit will come back, and that share price will go up because the valuation is that cheap. Positive for something like a Corsair and a few other companies is the logistic problems do seem to be calming down a little bit right now. So it looks like we are flatlining a little bit. So it's still extendedly higher cost than what we had previously, but at least the problem that they had of a lot of these logistic problems are starting to calm down a little bit by the looks of it at the moment. So that could be a good thing in the next kind of few months for a few of these companies that you know, for example, might have seen that have had mentioned a few logistic issues at least. But yeah, those are 12 stocks that I bought. Obviously, they're not going to do them all in depth because the video would be about 3 hours long. Nobody wants a 3-hour video going that long. I don't think my voice would last that 3 hours. So yeah, a little bit of a quick roundup, and tomorrow I might do a deep dive on actually one of these stocks. I'll see. But yeah, thought I'd just keep that update with you so you guys know what I've been buying and selling. And obviously, with a lot of blood on the street, I took advantage of that last week and I bought a lot. So I hope the video was useful. If it was, hit the like button. If you're new, subscribe. I think we're very close to going to, I think it's 12,000 subscribers. I think we're like 30 off or something. So if we can get there, that would be absolutely amazing. And I'll see you on the next video.